Hey guys, this is Bob Kudla from Trade Genius. Got my good friend Phil with me. You guys always accuse us of being bearish. Well, we're going to flip the script on you today. Stay tuned.
Trade Genius.
Hey guys, I want to tell you something that we do that really will change the way in which you look at trading and also absolutely help you increase your profitability and how much money you make. It's the Trade Genius newsletter. We put the newsletter out Sunday night through Thursday night, and this really looks at the plumbing of the markets and helps prepare you for the next trading day and help you make money. And we give you a lot of information. We give you market statistics, we give you market levels, we give you the seasonality, what's happening with different sectors of the market, and we will help you identify whether the market's in a bear mode or a bull mode, or whether it's euphoric, whether it's despondent, and it just puts you in a position to be on the right side of the trade. So take advantage of our offer that we have below, and you'll love it. I mean, one trade that you make with this thing can pay for definitely a month, maybe even a year's worth of service. It's that powerful. Use promo code podcast for 15% off the retail price of newsletter. Thanks for listening.
Okay, Phil. So what are crazy Bitcoiners saying the price of Bitcoin is going to be? 100,000, a million? What's the most conservative financial management company out there? Fidelity? What do you think they say Bitcoin's going to do?
Well, you would think that they would probably maybe give you a six-figure estimate over 10 years or something like that.
Yeah, Fidelity came out with a market call of $1 billion over the next 15 years, Phil. Are they insane?
Well,
or do they know that we don't know?
There's a couple of takes on this. One is they've become a broker for Bitcoin and crypto, right? Because they have a new Bitcoin or crypto trading arm. They're offering it to clients now. So I think they're gunning for being a crypto exchange, because I think a lot of people, at least on this side of the border, saw what FTX did, down in the Caribbean and thought, we need to get in on that. So I think some of what we're seeing with the regulations and things like that is trying to squeeze out the early incumbents so that the legacy players can get in on this action. I just think once the legacy players get in, we're going to start seeing a reversal on some of this aggressive regulatory stance that we're seeing as of right now, all by design. But for them to be calling out for $1 billion, that aside, what they're looking at is basically the supply and demand metrics. Now, I know the guy that wrote this up was kind of looking at the stock to flow ratio, right? Which was all the rage a couple years ago. And that model's been lagging. So most people have written that off. I don't think it's completely written off. I think you just have lags, but over time, that stair step model of, it's the supply. What's the supply doing? Supply in this commodity goes down every 4 years. It's decent, disinflationary, right? No other commodity does such a thing. And we really haven't gotten into the demand. I was talking about this in the room last night to some of those guys in the crypto room, that if you look at the demand, why hasn't Bitcoin gone up more? There's only 1 million wallets that hold 1 BTC. I mean, 1 million into 8 billion plus people on this planet. I mean, that's nothing, right? So we haven't even seen demand yet, and we've already seen spikes up to 70K just about. So what happens when there really is big organic demand? The world starts to really adopt. Everybody's really taking, Bitcoin into their portfolios. You're going to see a supply squeeze. So that's really the next thing that's going to happen that can actually drive the price of Bitcoin. But, what does that? Well, the institutions getting involved does that. Now, here's a chart that shows us a comparison, because I do think there are similarities to gold and how gold grew over time and Bitcoin. This chart plots on the upper pane the price of gold, and I've noted where the ETF era for gold started. So first it started in Australia in the latter part of 2003, I believe, and then in 2004 the first gold ETF was introduced in the United States. Well, as you know, we've had our Bitcoin ETFs introduced in 2021, and I think there was another one in 2022, but they're all derivative based, right? We have actually a couple of them now. They're all derivative based. So we still haven't seen the spot ETF for Bitcoin. However, that being said, the ETF era is here. What the ETF era does is allows more accessibility into the investment into Bitcoin. So we'll probably get a spot Bitcoin in the next 12 months. Not sure what the SEC's problem is. I haven't really seen a good excuse for it yet, but sooner or later we're going to get one. The demand is too high. So I plotted out what that would look like if we were to go to $1 billion. And that's what it looks like in the lower chart, where we get into the ETF era, and then over the course of 8 years, because that was the 8-year run that gold had, had that got up to its highs going into the great financial crisis. And that takes us up to $1 billion, I think, into 2031 I have there. So, if you zoom out on the chart, it doesn't look that impossible. But again, I think people have to realize that the supply is really finite. So there's about 2 million plus Bitcoin on the exchanges. Where this gets interesting and where what we've been calling for a supply shock, right? Where there's no more Bitcoin to be had on the exchanges. Some exchanges won't even be able to price Bitcoin out because they won't have any meaningful amount to have. You might have a bigger exchanges trying to buy out smaller exchanges, their Bitcoin stash. The only guys that are going to be able to produce Bitcoin are the miners. That's why I'm very bullish. And Bob, I know you're bullish on Bitcoin miners too, because they're going to be the new diamond cartel. There's not going to be anybody else that's going to have Bitcoin supply except for maybe the larger exchanges. This means some exchanges won't be able to price altcoins in Bitcoin. So that altcoin Bitcoin chart ratio, they won't even be able to make a market for that. It'll just be, altcoins versus the US dollar or dollar denominated trading. So very interesting stuff happens, but you're going to get a parabolic move in Bitcoin. And if you're not invested in it now down here, where it's near 20K, or maybe we go below that, if we get recession and we dive down with the markets into the rest of the year, I think that's your last buying opportunity, because we're going to wake up one week, there's just going to be a move and it's never coming back. And that's going to be the supply shock move. And you can see how quickly Bitcoin moves. When we get into these bullish modes, it just takes off. You'll have a $10,000 move in a week and, we'll come back there later. And it just doesn't, because the supply effects have taken hold over a growing demand. It's just, there's this big lag when we talk about supply and demand with Bitcoin and the price. You'll see a lot of accumulation happen, and you may not see the effects of price for 3 to 6 months, but that lag does correct. It does catch up. And when it does, it's going to be too late for people that just kind of blew it off and said, I'll wait another year. It's going to go down, and it's not going to go down. So that's why we say, you always want to have a stacking stash, Bob, as opposed to, trading in and out. Trading in and out's fine, but you got to have that long-term stash, because you just never know when the supply squeeze starts to take hold and this thing just bolts for the hills. Because 2 million BTC on exchanges, if a large player, a large country decides they're going to start accumulating it for their treasury, that can go away pretty quickly.
Yeah, I mean, two things for me is, one is that I think Fidelity is also making a call on the dollar too.
Correct.
And remember, Bitcoin doesn't have to do any of the heavy lifting. In fact, Bitcoin's going to do no lifting whatsoever. And the same with gold. They're just going to be. And it's really the dollar that's going to be losing value in the eyes of investors. And they're going to want to go ahead and capture. And I totally agree with you from the sentiment. You and I have always been of the opinion that Bitcoin is a U.S. government or intelligence agency creation to be the backstop for the dollar. I'm more convinced of it than ever, because the way and how reckless they have been acting towards the budget is that they don't care. Right. And so they must know they have a plan somewhere. And you're right. We're going to wake up one day and there's going to be a revaluation of what the dollar can purchase. But Bitcoin and gold won't care. And the other thing, too, that really caught my attention with Mara was when we had that environment where the subsidy got wiped out by the gains. And that meant that, in my mind, is what happens when there's not that many new coins to print, and I use the word print, to bring into existence from the calculations, right. Is that the miners are still going to get paid. And so they're going to start eating into the existing stock out there to do transactions. So I think for people is that if you're afraid of Bitcoin, you don't want to get there's 3 or 4 companies, ETFs out there already that you can hold Bitcoin as part of a fund. And also you need to get a hold of Mara or Riot or Hut or BTBT or some of the other names out there, because they move like Ferraris. In fact, when they start moving, they're going to be running ahead of Bitcoin because those guys are closest to the action, and that should wake you up. Even this morning, Phil, Bitcoin moved up almost $1 in anticipation for the dollar weakening with this debt ceiling being resolved. People don't believe the Fed's going to be able to hold the fort here. So if the Fed is right, Phil, we should get one more push down in Bitcoin and Mara et al. Mm-hmm. And then if you're not buying, then you're not buying, because there's no way the Treasury and the Federal Reserve is going to allow the country to go into a deflationary depression, because then they're out of business. And that'll be your buying opportunity. But there's no reason why you just can't buy some now. And if it's in a longer term account, just tuck it away and don't worry about it for 5 years. You'll be really, really happy that you did.
Totally agree. And I know you guys have been waiting for a Bitcoin miner video, which we will get to because we do have some what I think are very favorable plays in that arena. But there's a way to approach it that we need to talk about to get through this cycle. So you're not going to want to miss that video. But otherwise, Bob, that's all I had. So
Me too.
All right, well, that's going to do it for this video then. Thanks, Bob, and thank you for watching. Please hit like and subscribe. Check out our specials over at tradegenius.co. We've launched some new indicators. Check those out, and we will see you on the next video. Take care.
Trade Genius.